This is the ETH Bitcoin ratio versus Fed net liquidity, outright, not the year on year. And Fed net liquidity leads it by 3 months. And we know that in 5 months ahead of this, we will see more liquidity coming. It keeps going up. So if it keeps going up, then ETH eventually will break out from Bitcoin. Now, I've been showing for a while this chart of mine, which is the TradingView chart of the log chart of ETH versus Bitcoin. And I think it's a huge wedge pattern. And if it is correct that it's a wedge pattern, it's massive. But over time, if this breaks, then ETH is going to massively outperform.
Raoul Pal, the founder and CEO of Real Vision, anticipates that Ether, the second largest cryptocurrency by market size, will have a good run during the current bull market. Ether has significantly outperformed Bitcoin since its lows last year. Although both assets have seen huge price increases over the past year, they are still far from their all-time highs. When comparing year-to-date gains, Bitcoin wins with a growth of 87.33% compared to Ether's increase of 66.11%, although Ether has had a better run recently. While the leading altcoin has increased by 67.11% over the past year, compared to Bitcoin's 51.34% gain, Powell thinks its future performance will be much more spectacular on all fronts. The renowned macro guru addresses a few macro factors that, in his opinion, together indicate that the current state of global liquidity is likely to shift in a recent broadcast that was posted on the Genuine Vision crypto channel. According to him, the GMI Financial Conditions Index, which provides a 5-month head start on Fed net liquidity, is rising, indicating that Fed liquidity will remain stable for the remainder of the year. Raoul Pal predicts that the values of crypto assets will continue to rise for at least the next 5 months given the documented over 80% link between the crypto market and Fed liquidity. The next likely move of the US Federal Reserve is also discussed by the macro guru. Raoul Pal predicts that the central bank, along with many other significant central banks, will soon be required to intervene and save their own economies and financial markets. Although he is uncertain as to when we may anticipate seeing that certain infusion of cash into the markets, he is confident that it would be preceded by another US banking catastrophe. He claims that when the regional banking industry starts to exhibit severe warning signals of an oncoming collapse once more, the Fed will use that as a cue to not only lower interest rates but also print additional money to help the banking sector and, by extension, the entire economy. He also discloses a crucial truth regarding investor behavior, which he interprets as an indication that the upcoming months would be extremely beneficial for all coins. The macro guru claims that after a trend has been established, liquidity moves from the highest quality assets to further out on the risk curve. He thinks this is a crucial hint that money will soon start shifting from Bitcoin to alternative currency, starting with Ether, of course. Now that Raoul Pal has shared some intriguing charts to support his theory, we will show you some key portions of his film. Please watch the entire video, click the like button, and subscribe to the channel to see more.
We do know that a lot of people like fractals in crypto. Sometimes they work, sometimes they don't. Do they give you an informational advantage? I think generally, contextually, they help you understand human behavior and how prices can move. I don't really like to trade on them all the time or as the main thing, but as supporting evidence, often interesting. I've also had some spectacular failures with them too. If you remember the ETH call, the next leg higher call back in 2021, that was based on a fractal. It completely failed, but luckily I owned call options, so it wasn't that painful. But anyway, so you never always know. But the point being is this cycle is pretty similar to 2010-11 cycle. Same kind of setup. So that's interesting to me. What's interesting, it's a similar kind of setup from the 2017 cycle, 15-16 cycle. So we've got a similar structure and a similar kind of market. 2019 was a bit weird because we had that big correction over all of 2019 after a huge run to begin with, 300% up, then a big correction down, and then we sort of went parabolic. I have a feeling we might go parabolic earlier here because I think we're getting closer to a banking crisis within the regional banks that will require the Federal Reserve to step in. Interest rates are kind of getting out of control, so interest rates going up, the yield curve inverted, bad news bears for the banks. You can use the KRE ETF to see where we are in that. But if that starts breaking 35, 30, then it's game on for more cowbell to come, because the Fed are going to have to bail these people out. And then we've got the commercial real estate problems behind it. So that's the kind of backdrop of why the cowbell will come. And I think it's even an excuse. Maybe that's the reason the Fed are tightening rates even further, is to create a crisis so they can cut rates, so they can monetize the debt. Because if they don't, they have to print more money because the interest rates are higher to pay for the debt payments. And that becomes a total catastrophe. The key point is liquidity up. If I use my simplest forward-looking indicator, which is the GMI Financial Conditions Index, it gives us a 5-month lead on Fed net liquidity year on year. And it says liquidity goes up till the end of the year. Okay, if liquidity is going up to the end of the year, it generally means crypto prices are going to go up till the end of the year, because I've shown the relationship between the two. There's in fact an 87.5% correlation between global liquidity index, not the Fed net liquidity, the global liquidity index, and Bitcoin. The reason it's only 87% and not higher like the Nasdaq, which is 97%, is because Bitcoin completely diverges so much in bull markets. That's the outperformance and the boom bust phase. Anyway, Fed net liquidity is going up. Global liquidity is going up. We can look out 5 months. I can actually look out to 2026. That's the theory and hypothesis that I've been working on in the Everything Code. But right now, it tells us liquidity goes up. Now, liquidity also does something interesting. In all financial markets, after a period of contraction, when liquidity comes in, it goes first into the highest quality assets, and then eventually, once the trend is established, it goes out much further down the risk curve. So you see it in bond markets, it goes from government bonds to better credits, to junk bonds, to emerging market junk bonds, for example. That kind of risk curve is very common, and it's the same in crypto. It's like a human behavioral trait. When do I feel comfortable taking more risk? Am I making money? Do I want to speculate more? So what I found is, while I was thinking through this, thought, well, obviously crypto must act the same way, and it does. And here's the proof. I don't think anybody's seen this chart before, except Global Macro Investors subscribers. This is the ETH Bitcoin ratio versus Fed net liquidity, outright, not the year on year. And Fed net liquidity leads it by 3 months. And we know that in 5 months ahead of this, we will see more liquidity coming. It keeps going up. So if it keeps going up, then ETH eventually will break out from Bitcoin. But over time, if this breaks, then ETH is going to massively outperform, which has been my hypothesis for a while because of network activity and the amount of things being built on top. But another way of looking at this is I can use the ISM, which is even more forward-looking than our financial conditions index. The ISM gives us a 20-month lead, it's inverted here, versus the ETH Bitcoin cross. It kind of shows us where the business cycle is going, and as the business cycle improves, the ETH Bitcoin cross will improve. We're at the point where the business cycle will start to turn as we start bottoming in the economy. I know this is the most contested thing on earth, but that's what my work shows, and therefore ETH Bitcoin cross will start rising, and massively so. So that's getting me very interested in that, in ETH over Bitcoin. Now the next chart is the Fed net liquidity versus ETH. I mean, it's 1 for 1. It's crazy. But, and we see this with many assets, but as I mentioned before, Nasdaq and S&P started dislocating from this as the AI technology narrative started attracting new capital and their secular adoption models too. And so that starts outperforming. So once crypto starts seeing that, I'm guessing it's going to be the ETF we're going to start seeing this drift away from the models and start outperforming. And that is, again, a signal that we're going into that acceleration phase that I'm looking for. And I always find that acceleration phase is obviously the most exciting part. That's the point when people start stupidly counting 1,000 for every time Bitcoin goes up. Oh, it's gone from 30 to 31 to 32. People start putting laser eyes and just lose their general shit. But it's a lot of fun, can be very stressful. But that point, I think, is setting itself up by all the macro indicators I look at. The other thing is just the pure chart of ETH. It's gorgeous. That kind of wedge with the flat top That's the bottom pattern. We've got that zone where it needs to break through of the previous two peaks. Breaks through that zone, and we're probably into the acceleration zone. Now, could it go up and pull back down and retest? For sure. How does it do it? I don't really care. What I'm looking for is the long-term trend of adoption here and the appreciation of the asset price due to the macro factors and also the factors within Web3 and crypto itself. So that's kind of maybe our line in the sand. And again, it's not something you just want to buy all in just because it broke that level. Just it's one of the marker stones en route. We've got all the other macro indicators too. But another chart really struck me, and it's this chart of the crypto market cap minus Bitcoin and ETH. So this is basically the altcoin and stablecoin market combined. Now, I think of stablecoins as cash on the sidelines that move into alt. So overall, I think this chart is a literally perfect wedge pattern. And it too, like everything else, suggests we're about to come into alt season, the risk-on season. And if that is the case, this is going to go a long way. This is when crypto total market cap goes from, let's say, wherever we are today, 1 trillion or so, and it ends up going to 10 trillion. Something crazy like that. I don't know exactly, and it doesn't matter exactly. Too many people care about price targets. It's the texture of the move that matters and the general trend. So everything is consistent here that something big is about to happen. And the time horizon here, a lot of these are longer term charts, is I think the banking crisis comes back at the end of the summer and we start to see changes. I think the Japanese may have to intervene in their bond market again. Maybe the UK do too. But we are really at the cusp. We cannot deal with bond yields going like this, going into refi season. So something is about to change. It's going to change big.
What do you think about Raoul Pal's interview? Do you agree that it is altcoin season and that top altcoins like Ether, Solana, XRP, and Cardano will make a lot of huge moves? Post your thoughts in the comments box and let us know what you think. Make sure you like this video, subscribe to the channel, and enable post notifications if you want to see more like it. Thank you for watching.